All right. Hey, guys. Today we are going to take a look at silver. And at the same time, I'm testing my live connection here on YouTube. In the future, going forward, starting this week, I'll be doing more frequent live broadcasts to take a look at crude oil, silver, gold, maybe a currency pair, and possibly some indices. All right, so for now, let's dive in and take a look at silver through the lens of Elliott wave. All right, so going back a bit to this low back, let's go back to May, the beginning of May. We were counting the pullback after the early April high over here at around 30.50. We got a very nice corrective wave down, just held above my supply demand zone down here around 26 and change. And then what we got was a 5-wave impulse off of this low where I've labeled it green wave 2. So what we got next was a larger 5-wave structure. Here's the initial 5 waves up. And then another 1, 2, 3, 4, 5. This entire structure did top out at an ideal ratio measurement using Elliott wave standards. In fact, I'm going to move that label over to the center just to make it, oops, that's the, I meant to say the text. I want the text over in the middle just so it's clear what exactly that ratio box is referring to. And what it is referring to is the ratio of waves 1 through 3, the entire length of 1 through 3 versus the height of wave 5. That ratio is a very nice clue and guideline which helped me to expect a pullback. And while we are talking about that pullback, which I've labeled an A wave, another clue regarding how do you know what kind of pullback we're dealing with? Well, part of it is based on where it terminates. So if it terminates near the 382, then it is possible that you're dealing with an A wave. Another very nice clue about that is the structure of the decline itself. That is another clue. So in this case, in this example, we've got something that meets the criteria for an A wave. So, and I'm just going to change this color here so we can see a little more easily. So you can see that this price wave comes right down almost, I mean, and then once you get that kind of a move, you're thinking the B wave may or may not exceed the top because there's an allowance for it to exceed the top, but in this case it did not. And also given the structure of this, especially up here in this area, gave me a clue that it may be a B wave. And what comes after a B wave would typically be a C wave, which we know should be a 5-wave structure, which in this case is what we got. 5 waves down, so we call that a C. But as this started to come back up, my question is, how do I know if this is the low or if it's just an ABC to another A wave? And then we're going to get another 3-wave move down. When corrective waves typically move in 3s, yes, you can have a 5-wave move somewhere involved in the corrective action. Yes, you can have a 5-wave move, but overall, corrective waves are composed of 3-wave moves. That's a fundamental tenet of Elliott wave. So the structure off of that low is what gave me a clue, because it started as what could have been a 1, 2, 3, 4, but then this candle right here just wrecked the structure and blew away any kind of normal standard ratio. So I started thinking, well, maybe this is another B wave, which because of the reaction it got from this supply demand zone, which I was looking to buy, as you can see from this box here, buy only if 1 hour candle close above. I did not get a 1 hour candle close above. Now we happen to be looking at the 4 hour. And actually this is my 1 hour chart, but I would just put it on the 4 hour so we could go back in time a little more easily and just see the overall structure here. So anyway, after this reaction and failure to get above here in a 5-wave move, which had me thinking, okay, this must be a B wave. Well, another way to know if it's a B wave is the kind of reaction and price wave that you get coming down from there. And it did come down impulsively with a nice 1-2 and ended up being a 5-wave move lower. Sorry, this chart is so messy because it's really my 1 hour chart, not my 4 hour chart, but I'm just showing you the longer time frame so we can see the overall structure. So then we came down and bottomed again, and it's kind of a similar idea. This could have been an impulse, but it appears to be moving in threes still, which has me labeling a lot of these movements as ABC. And then, of course, I'm using Fibonacci measurements. So let's drop down now to the 1 hour time frame so we can see what I'm looking at specifically last week. Okay, A, B, and then a 5-wave move for C. And the 5th wave of C is also composed of 5 waves. Very tricky action. Did get a fairly nice reaction off of that low. And the best you can consider this now, it's still moving in an overlapping manner. There hasn't been a true impulse. The only true impulses that I can find in silver are some of the larger structures from the past over here, which has us considering there may be a larger 1-2 in place, including this 2 right here. So in other words, we have a 1-2 and then another 1-2 of a much larger structure. So what we are trying to determine now is if this is another 1-2 inside of those 2 larger 1-2s. It did hold a higher high. What myself and other analysts who are Elliott wave oriented is we're looking for a true impulse, but we don't get that. We get an overlapping impulse, also referred to as a diagonal, which is fairly unreliable and not a excellent clue. But it's not an excellent clue that the bottom is in and we're going higher for sure. It's saying, hey, this is a diagonal. It's still overlapping, could still be corrective. So I know you want me to tell you what exactly is going to happen. I'm so sorry to disappoint, but that's not how markets work. The best you can do is collect the best clues you know how to collect and then use proper risk management. That's the best you can do. Collect clues. You're not going to know the future. The best you're ever going to do is come up with a more probable scenario than not within a field of probabilities. And honestly, this is what Elliott wave is so good at, is giving you market context to come up with your own definition of risk based on what you think is most probable in a field of probabilities. I know that's word salad. You can rewind this and write that down, because if you're new or if you're just learning how to trade or just learning Elliott wave, over time, especially the more you understand Elliott wave, the more you're going to realize the truth in certain things that I say that may seem dramatic or over the top or controversial. But once you really understand Elliott wave and understand how markets work, you realize that no, it's just what it is. It is what it is. And Elliott wave is really good at seeing things for what they are. If you understand how to properly measure things, it takes time. Anyway, so back to silver. As I was just saying, you can allow this to be 5 waves in an overlapping manner, which the best you can come up with, the most bullish thing is an A wave. And those that are in Armando, the Professor Trade Club, which I'm a member, or also ElliottWaveTrader.net, which I am a member, you would know that I sold got out of my silver up here in this ratio box. And we didn't get a candle close above this box. We got wicks up there, but given a diagonal, which can overshoot absolutely and extend, so this is not surprising. I just took off my risk in this box that I had added somewhere over here. And the folks that are in the club, the Professor Trades, would know this because I'm always posting these charts in there and trading, putting in my trades a lot of the time. So as this pullback unfolds, what I'm thinking is 5 up in an overlapping manner. Let's consider it an A wave rather than a 1, because it without talking too much and turning this video into word salad, just know that if it's overlapping, given the entire structure, this is not super confident. I'm calling it an A wave also, which the measurement is not on here, but actually, let's go ahead and measure it. Let's do a little real-time measuring. So typically an A wave, typically it's going to be somewhere around the 382. So let's see, drag it over 28,905. All right, so yeah, isn't that interesting? So there's the 382 right there. And an A wave typically targets in that region. So given that the candle bodies are right there, there's some wicks above it, that's perfectly acceptable for an A wave. So after an A wave comes a B wave. Now B wave can retrace. There's a bunch of different ways to think about it. I happen to have measured this B wave from the bottom of this low here, but B waves are notorious for strange structures that don't really follow a standard. B waves are very, very difficult to trade. So a safe way to play a B wave, since now I've told you how difficult it is, what you want to consider is the next wave is a C wave, which is very, very likely going to be composed of 5 waves. So what you can do is drop down to a lower time frame. I like the 21-minute, 13-minute, and even the 5-minute when I'm just examining a price wave. So what I would want to see on this lower time frame, I probably would drop down to the 13 and even the 8-minute. I want to see a nano 5-wave move up and a retrace. The next safe place to long silver is to wait for 5 waves up. You're going to have to drop down, honestly, 5 minutes probably good. And sometimes I even drop down to 3-minute just to try to look for detail. But in any case, if this B wave is terminating where it is possible that it's terminating here, but why gamble? Am I just going to go long? No. Wait for 5 up and a retrace, even on a nano basis. Otherwise, this can start coming down. So we can see if it's going to start coming down and lose this box, then all I'm going to do is measure it to the next low and see look for another place for it to bottom that would be reasonable. And then go back to the 5-minute chart and look for 5 up, 3 back, measure it. And if you really want to be safe, wait for price to come back up and break the top of that 5-wave move. So that is going to be true on any time frame, on any scale. When you are trading a 5-wave move, which means you have to understand what might be a 5-wave move. Like a wave 3 can be a 5-wave move. A wave 5 can be a 5-wave move. A C wave can be a 5-wave move. There are some examples of B waves moving in 5 waves, but typically not. So to keep it really simple and to manage your risk, because as you know, the real name of this entire game is risk management. You want to wait for 5 up and 3 back. All right. So be sure to follow me. If you're not already subscribed or following this channel, you can do that. I'll be posting analysis as I always do, certainly weekly and many times during the week. And if you are looking for a group of folks, like-minded folks, to learn not just Elliott, but more particularly Armando from Miami, his trading club is called The Professor Trades. I cannot recommend him highly enough for helping you get a handle on your psychology, for getting a handle on supply-demand zones, for getting a handle on price action, which goes hand in hand with Elliott Wave so well. That's probably why I gravitated towards Armando, and I'm now a member of his group because his explanation of price action using supply-demand zones and basic Fibonacci is incredibly useful. I use it in my analysis, even though I'm fundamentally, my My primary technical mode of analysis is Elliott wave, but I'm also using volume profiles, volume studies. I don't always post those, but I'm always looking at them. I'm always blinking them on and off. And of course, the other things like moving averages, RSI. But main thing, keep an eye on 5 up, 3 back. All right. Thank you for watching. Good luck. Take care.